All right, if you want to know more about them, check them out at www.caterpillar.com. That is their homepage where I pulled this information from. This production Caterpillar diesel engine, what you're seeing over here to the left, the D9900, was manufactured in October 1931 after 18 months of design and testing. Over $1 million was spent on research and development, a considerable investment in those days. Originally designed to power the Caterpillar 60-track type tractor, this engine's cemented the company as a pioneer in building vehicular diesel engines. In 1931, Caterpillar created a separate engine group, expanded its engine development to areas like generator sets and marine power. Today, Cat engines are commonly found in electric power generation. Other uses for Cat power include engines for the petroleum industry, marine locomotives, agriculture equipment, industrial power, construction equipment, and many more. The diesel engine's virtues of efficiency, dependability, and simplicity were what prompted Caterpillar to pioneer its use in mobile equipment 60 years ago. Those same attributes are characteristic of the Cat engines today. So another one that has been around a long time. Actually, they formed right around the time the country was coming out of the Great Depression. Still, we're kind of in the middle of it. So amazing that they were able to put themselves together during that time. And they have seen since then a lot of downturns in the market, recessions, and they continue to grow. Obviously, you've probably driven around any construction sites or anything like that. You may have seen some of their equipment on their tractors, and then obviously, as it mentioned, motors as well. So Caterpillar out of the industrial sector. Let's take a look at their performance. Caterpillar Inc., ticker CAT, again out of the industrial sector, closed the day at $182.44, down 1.23%. Looks like they're up a little bit in the after hours here. 52-week range as low as $167.08, as high as $237.90. At 182, they are creeping closer to that 52-week low. They have a market cap of $96.312 billion. Looks like they're a beta of one, which is just as volatile as the overall market, and you can see that volatility here. A PE ratio, nice PE ratio, under 16, so it's 14.61. They have a forward dividend of $4.80. That's paid out quarterly. The $4.80 is the payment for all 4 quarters for the year. So divide by 4 and you'll get your quarterly payout. And they have a nice dividend yield of 2.60. It actually beats the market, which the market would be like the market S&P. So it would include the whole market would include companies that pay real low dividend yields like Apple or Microsoft, down below 1%. So this beats the like if you were in a S&P ETF that paid out a dividend. I think the market's around 2 or 2.2, something like that. Ex-dividend date, their last one was in July. They should have another July 19th. They should have another one coming up here soon. And their 1-year target estimate, at least where I pulled this information from Yahoo Finance, not affiliated, just where I like to post some information, is $214 per share. Now let's take a look at the 35 stock analysts over at stockanalysis.com. The ones they've pulled together, call it a consensus buy, though it is right on the edge of a hold and buy. And part of that might be they see a low of $143.42, which would be a 21.39% decline. If it hits their average of $218.57, that would be a 19.80% increase in stock price from where it currently sits. And if it happened to hit their high of $291.90, that would be a 60% upside. All the while, you would be getting that 2.6% dividend yield where it currently sits. And if you were able to get it where it pulled back closer to this 143 low, or even hit that low or went below it, then obviously your dividend yield would be much higher. And really, these are quick hitters. I don't have any position in this to cover with you, so let's just jump right past that page. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel and join along on this journey to financial freedom. Again, hope you are on your own journey to financial freedom as well, and the information I provide helps you get there quicker. Drop a comment down below. Let me know what you think of Caterpillar. Let me know what you think of the industrial sector right now. Is it one you're looking at? What are you looking at in the sector? If not, where are you looking? What are you adding to your portfolio or want to add on more pullbacks? Drop that all in the comments section down below. I do personally read and respond to the comments. I'm always interested to hear your questions, suggestions for future topics, opinions, constructive criticism, or just what's going on with your portfolio, or stop in and say hi. Either way. With that said, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Quick disclaimer, I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm always sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk, can lose money, and should never invest any of your amount you're not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.